Well, very pleasant good morning. It's time for Team Victoria and Mike. Of course, Mike Hollis of East Coast Mortgage Lenders is a licensed Florida mortgage lender and servicer, NMLS 353429. And of course, Victoria Lloyd as well. Good morning, guys.
Good morning.
Greg.
How are you?
We're good. Everything's good. There's Mike. Now I can see you.
How are you?
I'm doing good. Have you been busy, Mike?
Yeah, the biggest problem I'm finding right now is I'm pre-qualifying a lot of buyers. There's a lot of good people out there looking for homes, but there isn't a darn thing out there for them right now. There's such a limited inventory. I'm just hearing all kinds of horror stories out there.
Well, I want to say it's limited because people are putting too much on their checklist. Like they want this, and this. If they're willing to compromise a little bit more and say, okay, so instead of a 3-car garage, I'll take a 2-car garage, but I want the swimming pool to go with it, and I want the square footage to go with it. Or I only want a 3-car garage, but if it doesn't have a pool, it's okay. It's that their checklist, it's amazing right now how large they've made it. And you remember what they say, if you make your checklist too large, then sometimes you get disappointed because you can't find exactly what you want.
Yeah,
So that's what I'm finding a lot of.
yeah, you know what? I'm finding that is coming back to bite us right now, because I've always said, you know what, if you're looking out there for a house, buy what you want. If you want the swimming pool or the 3-car garage, go out and get it now, because it's a lot cheaper than adding it later. And now, some of those options aren't available because inventory is tight right now.
And that's true, Mike. And those are two commodities that some people are asking for now, because they like to have a workshop, and they're having more cars, and some of their children are growing up and not leaving. So they have adults in their house. But when you find that perfect house that has all the ingredients in it, but yet maybe you don't like the color paint inside, or there's a couple of little cosmetic things you need to change, don't walk away from that house, because it's going to be more difficult. Now, when it comes to a 3-car garage and it's coming to a pool, in gated communities, I can find those a little bit faster, but on a single family lot, and let's talk about that. People are getting confused with what everything means. A single family lot means that's just a single family lot, and it has no deed restrictions. And where you get into a gated community that has deed restrictions, and it makes it a little more difficult. So let's say if you have an RV in a single family lot, you can park your RV out front in your driveway in Port St. Lucie. Some areas they want it on the side of the home or in the rear of the house. But in most cases, if you have a boat, you can park it out there. But a lot of the deed restricted communities do not allow it, or they have a special area for you to put it in. Or like I said, you have to put it on the side of the home.
Yeah,
so it does make a little difference.
I think a lot of the objections to going into some of these gated communities are the HOA fees that are charged, either monthly or quarterly. But I don't think a lot of people understand that those fees go to pay for services that you would normally pay if you just had a regular single family lot. For example, some of these gated communities include lawn care. Some of them include access to a swimming pool or recreation facilities. Well, that's still a lot cheaper than going ahead and putting a pool into your backyard.
Well, let's use, for instance, with my yard, because I do have a larger yard and I have a lot of landscaping, I pay over $200 a month just for that alone.
Mm-hmm.
Most people, let's say an average is probably nowadays they get them for $100, but it doesn't offer much for $100. So normally it's $125 or $150. Let's say use $150. I have a pool, so I have a company that comes and cleans my pool. There's another $90 right there. So yes, basic cable. A lot of them is basic cable. I pay over almost $300 a month for all my cable and internet. But yet, if I had it, basic, what's that run? Under $100. So when you do look at it, Mike, you're still going to pay those fees. It's just that it's not in a maintenance type thing.
Okay,
Yeah,
guys.
exactly.
Yeah, you've got a caller. Denise is on the line. Denise, you're on with Victoria
Denise.
and Mike.
Hi, Victoria. Hi, Mike.
Hi, how are you?
Hi.
Thanks for calling in. Denise?
Hello, Denise.
Yes, I can't hear anything on the other end.
You can't hear anything on the other end. Okay.
You, but not them.
Yeah. Well, yeah, you should be able to hear him perfectly. What's going on?
No idea. Are you far as not hearing them, or I just wanted to pick Victoria's brain a little bit.
Yeah. Yeah.
Okay,
You
Go right ahead,
you've
Denise.
you've been on with her now. Go ahead.
I'm sorry, Victoria, I didn't hear you. But, I wanted to call in and ask about condo fees. Okay, do you know anything about that kind of stuff?
Okay, what was she saying, Greg? Condo what?
She needs to find out about condo fees.
Okay, tell me what you want to know about them, Denise.
How many can they give you within a year, and how much? Do you know?
Oh, you mean as far as raising the cost?
Yes, 3 times.
Well,
And yeah,
I think there's state guidelines. It used to be that it could never go higher than 15%. I'm not sure what it is now. Now, remember with condo fees that, you know, when you read your bylaws, they can't just raise those condo fees without having a majority vote, depending on what they want to raise them for. So you got to make sure that you look in the bylaws and we find out exactly how the bylaws are written up as far as them raising the condo fees. Now, the biggest thing that's been biggest reason that they've been raising them is because of the master policy for the homeowners insurance, because a lot of those fees have gone up. So I know in some of these associations, they've raised the fees, and depending on what cable companies they've been using also.
yeah, we have Hotwire, and why I'm asking is because it raised $50, and now they want to raise it another 50 again.
Yeah, so for them to raise that, I think they have to prove why they need to raise it, and they need to show everybody, and everybody has to kind of vote on it. But that's interesting because Hotwire is something new that's in there where most of them were all using that Comcast before, which none of them are good anymore. I'm not trying to be mean, but I don't think I've found a good one yet.
Yeah, that's what that was in here when I came into this complex. And you don't have a choice, but it's included in with the fees, which saves you money. But I just wonder where it could cap off within, how much. If I heard they raised it like $115 within a couple of years, and now they want to do it again. So when I moved in here, it was raised 55, and now they're saying again they need to raise it. So I just want to know how many times in a year they could do that. But
Yeah, we got to go into the bylaws and take a look at it and see what the bylaws say, and then we have to check with the state to find out what the regulation is on how many times they can raise it.
Let me intervene here. Normally, there's a required budget meeting for all these associations. So once a year, the association has to get together. They have to have a meeting to vote on a budget. That is the critical meeting that you have to attend every year, not only as a condo owner, but also as a member of a HOA, a homeowners association. So what they would do is at the beginning of the year, have a meeting, vote on a budget, and that's when the assessments are set for the year. I've never, then if some emergency happens throughout the year, normally they would handle that with a special assessment. For example, let's say that an emergency comes up and they have to redo the roads because they had a sinkhole or something like that. Then they would have a special assessment for something like that, unless they've budgeted for that in the normal budget. But what is really critical when you look at these condos, you look at the reserves, because as a lender, what we do is we ask for the budget up front, and we review all the reserves that the condo is collecting. And as a rule of thumb, we don't know exactly what it costs to maintain your condo, but as a rule of thumb, we require that the condo put in reserve 10% of all the revenues per year. And there's no exception for that. So what we do is even if the condo has $10 million in reserves, well, we don't really know if they need 10 million or 20 million. So as a rule of thumb, a good management practice for a condo is to make sure they're putting 10% into reserves. This way you don't get hit with all these special assessments. But what you're asking for is how many times they can raise those condo fees. That's really set forth in the budget meeting. You have to attend that.
Okay. Well, this one, I just moved in here, so I just got an email with the budget. It kind of didn't make any kind of sense, but I don't know if they were doing it right, but I showed it to someone else and they said, I don't understand what they're trying to, to do on here, but I'll have someone else look at it that knows exactly what they're looking at, because I don't. But,
Well, you know what? You're an owner. You have voting rights in there. So it's really critical that you get involved with the association because you can help steer the direction of where the condo is going to spend these monies.
trust me. I do want to get involved, trust me.
Yeah.
But like I said, I just moved in, so I'm not familiar with this. So I'm gonna step up and speak out.
Yeah. And most of the time, these big increases, exactly what Victoria said, it's mostly due to insurance increases. So you get these big insurance premium increases, they got to pass that along to the homeowners.
Yeah, but it sounds like they're trying to do it with the hot wire, right, Denise?
Yeah, I think that
Okay,
for these people on fixed income, and if you raise them that much, that takes away from their Social Security checks. I mean, I feel bad. Some of them don't even have money to go grocery shopping. So this is why I'm saying you move into a 55 plus to live comfortably, and they keep raising, and the more they take, the less these people have. So yes, I will get involved as
right.
seeing what's going on with the budget. But thank you so much for answering my question.
Yeah, but look in the bylaws too, Denise. Take a look in the bylaws about the voting rights for the budget also, and how many times they can raise it within a year. And there is a state regulation on that also.
Okay. Thank you, Victoria.
Okay, thanks. I'll be talking to you. Thanks, Denise.
Okay, honey. Bye-bye.
Well, that's a real interesting question. And, of course, Carol and I were going over our business insurance for this year and upcoming year, and boy, it's going up pretty substantially all the way, all the way through. So yeah, I understand the associations are probably looking at that too.
Well, yeah, they do all the time. I mean, that's been since day one, since I've been selling real estate for all these years. That's been the number one thing is when you're in a community of an association that they maintain the outside of your homes and the roofs, and they have to get the master policy for insurance. That's where the cost have always gone up. Unless, like Mike said, if there was a bad storm or they need to put a fence up or some hedges that they didn't have, budgeted for, they will just do a special assessment for that. But other than that, they usually have enough in reserves.
Yeah. And exactly like when we approve a condo for financing, we look at all this because when I've looked at condo budgets where they don't budget for reserves whatsoever. They're just the status quo is just to assess everybody as needed. And the problem with that is like if it needs a new roof, I mean, a new roof on a condo complex could be hundreds of thousands of dollars. If you don't have it properly budgeted in your reserve account, then that could be a huge assessment for somebody, and that could have seriously affect property values in there.
Absolutely. It absolutely can. But it is regulated. We just need to find out. Like I said, years and years ago, I remember them saying it can never go higher than 15% in any one given year, even if they wanted to raise it. So maybe they couldn't raise the maintenance fee more than that, but then maybe they could have added an assessment on top of it. I'm not sure.
Yeah, I don't know. I mean, because there are requirements that the condo buildings, the projects have to have proper insurance. So what do you do if you're a condo, leader in there and, you're an officer in a condo complex and all of a sudden your insurance bill goes up. You got to pass that along because you have to have proper coverage.
And
Absolutely.
I wonder if they're blaming some of the increases maybe on COVID too.
They could. I haven't heard that yet, but everything that happens nowadays is because of COVID. Yeah, my dog bit you because of COVID. He's been locked up for too many days.
We have a little standing joke here that COVID is Latin for bad service.
Yes, absolutely. That's what
Oh,
they're saying.
that's great. That's really great.
Yeah, that is funny. And I had to call somebody yesterday for like a home warranty on which you can get when you purchase a home, and the seller offers you a home warranty for 1 year. So if anything breaks down in that year, you're covered. And I called, this 800 number, and I could tell he's working from his home because I could hear his cat crying. So, but he was not very friendly at all. And I tried to say that in a very nice way, but I didn't say you weren't very friendly. But I said, like, where do you live? What area am I calling? Just to kind of see where he lives. But he
No,
was
that's because his
not,
cat wasn't feeling well.
yeah, probably. I have a cat too, but he was pretty grumpy. Let me tell you, I tried to break the ice with him, but it didn't help very much.
Yeah.
Let's talk about a couple of things here, Mike. What I'm falling into, and I know that a lot of people get on the internet and they find out, where to go with mortgage people and where to get loans and, how to look for real estate. Everybody thinks they can do everything on their own anymore. And, what I'm finding is people are making many, many and major mistakes and not understanding what they're really doing. I want people to understand when they hire us to help them find a home, we don't charge them anything. They don't pay a fee at all. A lot of people go, well, what do I have to pay you to do that? You don't pay anything. The seller pays the fee when I find you the home. So I do all your legwork. I get all of these listings together. I know what the neighborhoods are like. I look through these homes. I know if there's any problems. And I pass those on to you. A lot of people are getting on the internet and they're finding these properties are already pending or they don't exist. Plus, because the kind of market that we're in, we've gotten a few people that put fraudulent things up on the internet. And some people have given people money and deposits on homes and rentals, and they don't even exist because those people don't really even own those properties. And that's where we come in to make sure that everything's done in a fair and honest way, because you don't want to lose money nowadays, Mike. And the same thing goes for you, where I was talking to somebody that went to an actual bank and lender, and she just thought there was one way to go because that's what she told her. When I was trying to explain to her, there's so many other avenues that we can take. I only wanted to give people the options that they could look for. And it doesn't cost them anything to talk to you. So
Yeah.
I want people to realize that we're probably the only people out there that do everything for free, and people want to know why we get a professional fee for what we do. But we don't get paid until it's all done, said and done.
Yeah, and there's actual mortgage lenders out there that advertise that they pay their loan officers by the hour, not by the closing. Now, I'm perplexed by this because, if you don't have the same incentive to get your loan closed, I don't know why you would deal with that person. Because, like you said, we don't make any money unless we're successful for you. We get you to the finish line. We get you to the closing table. So it's really important to deal with people that not only have the knowledge and expertise, but, also have, financial incentive to do the best thing for you.
Right. So when these people are at work all day or doing what they do and what they know best, why spend those hours? So they get on these, like Zillow, and Zillow will say, oh, this house is worth 253,000 and they've got it listed for 350,000. They don't know what these neighborhoods are worth. These companies get on so they can get advertisers and make money. They're making money off of them, and they're making money off of me. And what they're doing is they're giving a lot of wrong information. So for instance, I get maybe 100 calls a day for this one particular rental that I had that's been rented, but yet it's off in our marketplace in my MLS because mine's the most updated, but it's telling them it's still available. And there's no way for us to go in there and do that because they go and they grab these things off the internet and they just post it. And that's the way that they get all these people to come to their sites. So it's kind of scary what's going out there because not everything is accurate at all.
And also in this crazy market, when there's such few properties to look at, it's really important to deal with a professional like you because you can see what's on the market, but you have all these established relationships over the years. I hate to say this, but over the decades with you, Victoria.
Yeah, I do. Several, four
So
or
what
five.
happens is you establish relationships with other professionals that you are friendly with, and you usually have firsthand knowledge of what might be coming on the market soon. So you can be prepared to see some of these properties before they even hit the market.
And that's true. And that's the other thing is that, I do have a great relationship with other agents that are out there. And the other thing is when we're going to put in an offer, it does make a big difference also because they know. Like a lot of people say, Victoria, I really enjoy doing business with you. I'm fair, I'm honest, I do things quickly, I get it done, I'm accurate, I follow up on things where a lot of the other agents don't, and that scares them. Because the
Yep.
first thing they say, Mike, is, do you have a pre-approval if you're going to go for a loan? And I'll say, yes, I have Mike Powell with East Coast Mortgage. And I said, he's been in business for over 25 years. And I said, I've been really doing business with you since almost that you started.
Yeah.
Because you started what, 1990, what was it?
Well, I came into this area in 1994.
Right.
So,
I knew it was in the
been
90s.
doing business in the area, but I started East Coast Mortgage Lenders in 2005. So we've been around for quite a while as that company.
Well, yes, but that's what I was with you in the 90s.
Yeah.
And so we've been in business for many, many years. I met you many, many years ago, right before you got married. Right before you got married, you had just gotten engaged.
Yes.
And so that gives us a timeline.
Well, what's interesting now is when agents are out there showing properties on the weekends, literally there's 4 or 5 families waiting in front of them to see the same property. And there's multiple offers happening on these properties. And what happens is these listing agents, they want to deal with people that are professionals. They want to deal with Victoria Lloyd because when she brings a buyer in, those buyers are for real. They've been pre-qualified. You've done all your homework. So that makes the process a whole lot easier. If you go in with, an agent from out of the area, because I'm seeing agents from Miami coming up here to show properties because they can't find anything down there and they think it's so much cheaper up this way. But
Yeah.
when they walk in with their buyers, these listing agents, they don't know these people. So they want to deal with people that they're familiar with. And that's why it's critical to deal with not only a local agent, but a local agent that's very respected like you.
Well, the other thing that I'm finding though and this is not being disrespectful to these other agents that are down south that are coming up here, but we have a different way of doing things. We like to have updates and keep on top of things. So constantly I'm saying, how's the mortgage going? How's this going? How's that going? And I have a hard time getting even a phone call back from them. And
Yeah.
that's the only thing that bothers me. They don't follow up. They kind of like, okay, let me drop them off on the doorstep. Let's write up a contract. And then they disappear on you. And those are things that make me very unhappy. And
Yeah.
it makes me nervous because when people are trying to sell their home and they're packing their bags to move, we need to know what's going on at all times. And as you know, Mike, they can pull a loan at a closing table if a lender has the right to. Has it ever happened? No, but it can happen. And we've got to just make sure that everything's, we don't want to make sure anybody quits their job right before closing. We want to make sure nobody's gone out and, like you say, bought a couple of cars or changed their credit report.
Well, I'll tell you kind of a story. It's a success story for me, but it was kind of a horror story for my client because they were dealing with a large bank. The initials happened to be WF. So they got to a couple days before closing and then found out that they had a problem with a roof leak on the property. 2 days before closing, they decided to review the appraisal, and in the appraisal there was a blurb about a roof leak. Well, that crushed the transaction. I was able to take the loan, knowing that going in, we were able to get them approved and clear to close literally within 3 days. We closed in 1 week. So that is unheard of in this market. It's a very difficult process, and we dropped what we were doing and got the job done. That's a success story.
That is good. And I know that you can do that because you had to do that for one of my clients that was having trouble with um, how many days he worked that week because he got sick, and it shortened his week to 32 weeks instead of a full-time 40 weeks. So it did take an extra week, but we did get it done, and that's all that matters. And as we were saying, we had Mark on last week, and talking about how to correct some problems on your credit report. And that was very interesting to people because we're in the process right now. I know you are. I was working with a nice couple that I've known for years that's been in a rental for many, many years. And now they're in the process of buying a home. And there's a few things that they have to do on their credit report. And you're able to help them with it, which is lovely. And as soon as we get that pre-approval from you that shows that, we've made those corrections and now we can go buy something, we're ready to rock and roll. We're ready to run with it.
Yeah.
So it does make a big difference.
Yeah, for all our listeners out there. Well, you know what? It's probably a real good time to give our phone number because we haven't done that. If you want to join our show, it's 772-340-1590, 772-340-1590. Yeah, and the person that Victoria was speaking about last week was Mark Tedda. He's from Certified Credit. He was on the show, gave us a lot of great information about how to improve your credit score, how to protect your credit score. So these are folks that Victoria and I deal with on a daily basis. So we have access to so much information that we can help other customers and help you get pre-qualified. And if you're not qualified, we can at least put you on the right track to get qualified.
Well, that's the thing too. Now, as Mark was saying, and he's been in the business for over 35 years, somebody tapped into his credit and and he had to get the protection on his credit cards and his accounts. I know of somebody else that I've used for many years that is a facialist lady, and somebody just tapped into her accounts. So all of a sudden, somehow they got a hold of her ATM card. So I want people to be careful because I really think there's a lot of hackers out there right now that are trying to tap into people that have good credit and have accounts, and you got to be very careful on how you use them. But I don't use my ATM card and number for anything. The only time I ever use that is when I go to the bank to take something out of the bank or put it in.
Yeah, and what's happening is there's so many people working remotely, working over the internet, that they become targets for these hackers. They're getting into their email accounts. They're seeing Social Security numbers, dates of birth, critical information that they can open up accounts. So it's really critical. Mark really drove this home last week. He said to go ahead and lock your credit. So you can lock your credit so no one can actually even run a credit report. Now, when you go into, it could be a little bit of a hassle when you go in to apply for something. So because you have to unlock those credit scores before you apply, that tends to be a little bit of an issue because a lot of people will lock their credit reports and they'll keep them locked for years. And then they come in to apply for a mortgage and then they forget their passwords to unlock their credit. So it becomes a little bit of a challenge. So if you do this, if you go ahead and lock it, which is a great idea, make sure that you keep those passwords in a secure place where you're not going to lose them, because it becomes very challenging to get those from the credit bureaus if you're going to unlock it. So one of the services that Mark had suggested is Experian. So you can go to Experian, www.experian.com/freeze, and you can go ahead and freeze your credit reports. Now that is just for Experian. So there's actually 3 credit bureaus that you have to lock your credit reports with. Another one is TransUnion. That address is www.transunion.com/credit-freeze. The last one is Equifax. That's www.myequifax.com. If you Google these, if you didn't write all those addresses down, just Google Experian, TransUnion, and Equifax, and you can look that up and go ahead and secure your credit scores. Really good idea.
But do we have to do that if we go into one of these companies that kind of protect us to, like, if somebody did tap into it or what we're using it at the time, they would notify us immediately that somebody's trying to do something?
Yes, but there is a difference because there's a monitoring service is different than locking the credit reports, because monitoring service is going to notify you after the damage was already done. It doesn't secure it, doesn't lock it. If you actually lock it with the credit bureaus, then nobody can pull your credit report whatsoever. So, it depends. If you know that you're in jeopardy, if you know that you're a target, you might want to go ahead and lock those reports with all three credit bureaus. But if you don't have any knowledge of anyone trying to access your accounts, maybe a monitoring service is good enough, because they'll notify you when an unauthorized credit report, or even when an authorized credit report is run, they're going to let you know. And if you've authorized that, then you just say, okay. If you didn't authorize it, then you want to look into it.
Yeah, I think that's what I'm gonna try too. I think the monitoring, because I think they monitor your checking accounts and savings accounts and your credit cards and everything, right?
Yeah, and there's different types of services out there. Matter of fact, I got notified by, of all things, the mortgage company that my mortgage is with, that they got hacked. So they offered a free service for a year. I signed up for it. So theoretically, I'm getting notified when someone runs my credit, but I haven't run my credit report since I signed up for it. So I don't know if it's working or not. But that's a service that probably only lets you know that someone ran your credit report. It doesn't really protect you from money being taken out of your account. There's other services that have insurance policies that go along with it too. So again, if you know you're being targeted, if you had a lot of fraudulent activity on your credit report or your credit scores or your credit cards, I highly suggest you go ahead and lock those credit reports with the credit bureaus. That's going to give you the most protection.
Okay, sounds great. That's a wonderful thing to have. And that'll work for sure. So other than that, as we're talking, please call us at 772-340-1590, 340-1590. Give us a call. We'd love to answer any questions you might have, or you can call us after the show. And my number is 772-201-8740. And that's Victoria Lloyd with Remax and Stewart. And I can help you with any of your real estate needs. And Mike, give them your number.
Okay, the best way to reach me is 772-285-0315. Again, it's 772-285-0315. One thing I'd like to just chat about is, where interest rates are going. Everyone calls, and the first thing they're programmed to ask is, what are interest rates and where are they heading? The trend has been upward over the last couple of months. We've had a couple little dips here and there. Today, we're on an upward trend again, a little bit of an upward trend. Most people don't know this, but mortgage interest rates are closely tied to what the 10-year Treasury security yield does. So if you look at the 10-year T-bill, it kind of moves hand in hand with mortgage rates. Right now, the 10-year T-bill yield is about 1.63. Just to give you a little bit of a comparison, about 3 months ago, we were at 0.63. So they've increased quite a bit, and that's what really been driving interest rates up. Interest rates are still at a very low level. If you compare the long-term average of the 10-year T-bill, this is over the course of 15 years, that average is 4.36. So we're still well under the historic average of that yield. So it's still a great time to get interest, a low interest rate. So if you're looking to refinance, if you're looking to buy a house, if you're looking to do a home equity loan or a construction loan, now is the time to really consider it, because the trend is upward. So you might as well take advantage of the low rates that are available today.
Yeah,
So what
Mike,
would a rate be, Mike?
Everyone, nowadays, the interest rates are based on your qualifications. So it's going to be different for everybody. So if you're in a 750, 760 credit score and you have a lot of equity in your house, then you could easily be in the mid twos. There's different types of loan programs. There's conventional, there's FHA, there's VA, there's USDA. All those interest rates are slightly different. And that's because of the risk associated with them. If you look at an FHA loan, that interest rate is going to be significantly lower than a conventional interest rate, because that's a loan that's guaranteed by the federal government. So there's a little bit more security for a lender to go ahead and fund that loan versus a conventional loan. Now, conventional loans are very secure too, and otherwise they wouldn't be in the twos, they would be in the sixes. Now, listen, you might not qualify for that 2.5 interest rate. You may qualify for 3.5. But even at 3.5, if you compare that to the historic averages on mortgages are in the 7% range. So it's still a wonderful time to get a mortgage.
Well, in 1987, I was doing 16 and 18% interest rates.
Yeah.
And I sold out 124 condominiums in 8 weeks with 90 backups.
Yeah. And that's when real estate was appreciating kind of at the levels where they are right now.
They were. You're absolutely. And then Houston, Texas took over 2 years later.
You know, what's very interesting is on CNBC this morning, the Fed made the announcement that they're pretty much going to hold the interest rates pretty close. They're saying pretty close to where they are for the next 2 years, which is very interesting. Great if you're thinking of buying a house.
Yeah. Now, when the Fed announces that they're going to raise rates, lower rates, keep them the same, they're talking about the interest rates that they lend to banks over a 24-hour period. Now, obviously, that is significantly different than a 30-year fixed rate mortgage. So, but it sets the trend and what the economy is doing. So if the Fed says they're going to keep interest rates where they are, then typically that has a positive effect on interest rates, and they kind of stay where they are. But it's really, a lot of it has to do with supply and demand. A lot of lenders only can process a certain amount of loan applications. So their way of monitoring or taking care of the volume, they'll just raise the rates or lower the rates depending on how many loans they can handle.
Yeah, and what's interesting, you talk about some of the large banks. Some of those large banks still don't have staff inside the big walls, if you will, that, a lot of their employees are still working out of their houses a year after pandemic started.
Exactly. All of our employees are in the office, and actually all of us have been in the office ever since the pandemic started, because once the pandemic started, the interest rates plummeted. Interest rates went down tremendously. And we had a banner year. We've had a record-setting year in 2020. 2021 started the same way. And honestly, the interest rates haven't changed all that much over the last couple months. They have increased a little bit, but not tremendously. But our volume has gone down tremendously. And that really has more to do with the amount of inventory. I have literally 15 people out there that I've pre-qualified. They can't get under contract to buy a house. It's just, it's a very frustrating market, and you have to be ready to pull the trigger when you find that house that maybe it doesn't have all your requirements, but it has most of them. You better move quick on that house.
But it's going that way all over. I mean, I was talking to some people that are out of state also, and people were putting offers in on homes, and I guess they went $50,000 over asking price and still didn't win it because other people went over that.
Yeah, I was talking to another agent yesterday, and they had to put an offer in $115,000 over asking. $115,000. Now that was over $1 million purchase. So as a percentage, it wasn't that much, but it's amazing what you have to do. One of my coworkers always uses this phrase, and it's so true in today's market. You don't really get a property under contract. You win the right to get that contract in this market.
Yeah, and that's the truth. That's the truth. I was showing property. I have this new listing that's lovely. It's on Morningside, and it's got almost 30 acres behind the home that's owned by the city of Port St. Lucie, that has the waterway and the preserve. So think of this. And in front of you on Morningside is a park. So when you look out the front of your house, you walk across the street, you have sidewalks, a park you can go to and enjoy. And behind you, you have a preserve, and you have all nature. You don't have any other houses you're looking at. Even the ones on the side of you are far enough away that you don't see them. And it's a lovely, lovely one. And one of the ladies was talking about it, and she goes, oh, I think it's just a little high. Well, when you look at the whole marketplace, it's not too high, you see, because people are getting a little spoiled because they feel like they want to try to get it for a much lower price. But where are you going to go find what I have to offer, which is a preserve in the back? And the only way you're going to get that, because it's only a 30 acre, is if somebody else has something on that street for sale,
Yeah.
because it'll end at the end of the street. So what I did is I pulled up every single listing in that community in a 1 mile radius on the water, even though it's a different kind of water, could be a pond, a lake, or whatever. And then I pulled up all of St. Lucie County, and there was nothing out there. We're not overpriced, and we do have a nice commodity there. So like you're saying, if it's something that you really like, if it's just a few thousand, we're not talking hundreds of thousands, a few thousand more, you should go for it. I gave her a prime example that when I was a teenager, I found this purse I absolutely loved. It was a wicker purse. Told my aunt, I didn't buy it. She says, but Victoria, if you don't get it, it could be gone. And guess what it was? And all these years later, I still think of that purse I should have bought that day and I walked away from. So
Well,
I can't reproduce it.
Yeah, it's funny. And I don't know if you've heard this, but I've heard this from other sources that now when you're putting a offer in on a house and it's usually above asking price, they're accompanying it with a hardship letter, like like a little letter telling them about yourself and why you want to move into this particular area or particular house. Do you see any of that going on, Victoria?
I haven't gotten it, but I've done it. I have
Yeah.
done it with some of my people. I like when I had, the nurses that were looking for the property. I told them I had a nice young couple that were looking and they had their children. I let them know that these are people that are going to love that house as much as they love their house too.
Mhm.
So yes, I've done letters and submitted it with it.
Okay, now what are you guys, a hardship letter you're saying?
Well, I don't know
Well,
if
it's
I'd
not
call
really
it
a hardship. It's
but
kind of telling them.
kind of tugging at your heartstrings letter.
Okay, no, I've never heard of that, but that sounds amazing.
Yeah.
Well, what we do is, Greg, is like, if we're looking at your home and you have your house for sale, I'm telling you, I've got, a husband and wife, they're nurses, they work in the hospital, they've got 2 small children, they want to raise their family in here, they'll love this home as much as you'll love the home. Where Mike might have a buyer that's coming in and he might just want to flip it or something. So we're just trying to tell you, that we've got some really very serious and people that are going to love your home as much as you do.
Yeah. If, for example, I've had a customer who did that. He was a retired veteran. He was having difficulty finding, a home in his price range. So he wrote a letter to present it with the offer, and the offer was accepted. So sometimes it works, and sometimes it just comes down to whoever has the highest offer on the house. And I get that, I understand it. But sometimes there, if you have a family or an old elderly couple that have owned a house for a long time, there's a lot of emotion that goes along with that when you sell a house. So sometimes if it's just a good feeling to know that a good family who's deserving or someone who really has a good story to tell, maybe that's what wins the property. And you have to be creative in this kind of market, and that's just something else to set yourself apart from all the rest.
And that's what I have right now. I went under contract on one of my listings within 3 hours. And the thing of it was, my lady's selling the home because her husband passed away and she needs to move closer to where her daughter is. She only has 1 child. So she's going to move into the Orlando area. And with that in mind, we had multiple offers that wanted to come into it, but my gal's in her 80s that wants to buy it. And she told her she's welcome to come back anytime she wants to. So she was happy to know that somebody's going to move into that house that's going to love it just as much as she did. So we went under contract, cash offer immediately.
Yep.
So
So-
it does make a big difference.
Yeah,
So
sometimes-
what are the percentages, guys, on these cash offers now? I hear that more often now.
Yeah, well, Victoria will have to tell you about that because I only deal with people with mortgages.
Yeah.
There you go. Yeah, that's true.
Well, and I guess if you had to average it out, kind of, it's almost probably like a 50-50 thing, where there are people out there that are getting cash from their homes and they're going in and they're paying cash for the homes. And some people will wait a amount of time and get and get a equity line of credit on their homes and try to pull money out of it. A lot of the people also are saying, I don't need to sell my house, and they're getting a loan. They're going to still be, this will be their primary residence, but they're just waiting. Because they think if they pay cash for it right away, then they'll get a loan later on.
What I'm seeing a lot, Greg, is what's called deferred financing. And deferred financing is when someone goes in and they want to win that contract. They want to pay cash for it. They put a cash offer in it, and they go ahead and they pay cash for the property. Either they borrow it from their retirement fund or wherever they get the funds. But at today's low interest rates, they want to take advantage of that. So what they'll do is they'll pay cash. They'll get the property probably maybe at asking instead of above asking. And then after the fact, they'll go ahead and put a mortgage in it. But I'll tell you what I'm seeing more and more frequently is that people are putting a full price offer on a property, and they're putting a clause in the contract stating that if the property does not appraise, they're willing to go a certain dollar amount over and above the appraised value. So let's say they bought the property at 300,000. It came in at 295. Then that clause would kick in and say, I'm still going to pay for, I'm still going to buy it at 300,000, or they may
Right.
put a dollar cap on it. So there's creative ways out there in today's market. Like when you have to win a contract, you want to make sure that you're setting yourself apart. You're dealing with somebody who's a professional like Victoria.
Yeah, you have to. And you really do. I mean, I'm not just saying it because I'm in the real estate business, but I'm saying you really, really need to have a good agent on your side. You really, really do. If you have a good agent, you know how to write the contract up. You'll know how to win the contract. I had a client that I referred out, and he went to Georgia, and that agent just did not help him. And he said, I want to go over asking price for this. And she said, oh no, you don't have to go over asking price. Just go at asking price. You'll be fine. And he lost out. He was very, very disappointed. I said, why didn't you call me and let me help you? So
Yeah.
you have to have people that are good. Like we said all the time, not all of us are created equal. We're just not. And they've got many, many agents out there, but that doesn't mean that they're professional and they know what they're doing.
Yeah, and one other thing is if you have the time, to get pre-approved. Now, there's a difference between pre-qualification and there's pre-approval. A pre-approval is when we go the extra step, we take your mortgage application, we document everything under the sun like we're supposed to. We get an underwriter approval. That's when an underwriter has said, yes, I will approve this. The only then the unknown is the property. So you can go in literally with a cash offer, knowing that you're going to get approved, maybe put then a appraisal contingency in the contract. So with something like that, you can go ahead and do a cash offer because you're approved up to a certain dollar amount, but subject to the appraisal coming in. So that's another way to set yourself apart.
Yeah, but sometimes they get a little angry when you don't tell them that.
Yeah, that's a great idea, and I'm glad you clarified that because I thought that was the same thing.
Now, when a pre-qualification is usually all that's required or all that's needed. That's when you've taken the time to talk to a mortgage professional like myself, and through my 32 years of experience, I know what's going to fly or not. But that's a pre-qualification. It's basically my opinion that you're going to get approved. A pre-approval is something else. That's when you actually do all the things you're supposed to do, supply all your documentation. We present it to an underwriter. They give us their stamp of approval. Then you're pretty much good to go, other than property specific information. Now, the property still has to appraise out. Yes. Property has to be in fairly good condition. Yes. So, it's not a done deal even when it's a pre-approval, because there are things that could jeopardize the approval based on the condition of the property or the value of the property.
Okay, that's really interesting. That's thank you for the clarifications on this. This has been a real educational show. There's no doubt about it.
Yeah. Mike runs them through, and that's what I try to explain to them. And the other thing Mike is a direct lender, which makes it much easier for our closings also. which we'll get into that and let people understand what that means also on our next show, because I think we're running out of time now.
Yeah, we got a couple minutes left. That's a real good idea because
Yeah.
I don't know the difference on that either.
Yeah, there's a lot of things that people don't understand, and that's why we want to make sure, because like I tell people, a pre-approval is just a piece of paper. You can rip it up, and not good. But when Mike runs you through the system and you've got that approval, that makes all the difference in the world. That means that the system says, yes, everything that he's telling them looks favorable and it's a lot stronger. So that's good. So we want to welcome everybody for listening to the Team Victoria Lloyd and Mike Paula show, which I'm a real estate agent in town with Remax of Stewart for many, many years, and been in the real estate business for many years. And I kind of gave birth to this town, so I know it like the back of my hand. And some of my good boo bears and some of my bad boo bears, but it's been a real great experience. And my number is 772-201-8740. That's 201-8740. And I'm on it like a hip pocket, because that means I'm always there for you and it's always with me. So I'm always working for you. And then we have Mike Paulus. Go ahead, Mike.
Yeah, and I can attest for that. She texts me at all kinds of crazy hours and all kinds of on the weekends.
Questions.
Yeah, we're a good team. We work together, and that's important. You have to keep the lines of communication open.
Absolutely.
It's very important for us to communicate. Anyway, I'm Mike Paulus with East Coast Mortgage Lenders. Been in the business for 32 years. Started East Coast Mortgage Lenders back in 2005. We're one of the largest lenders on the Treasure Coast at this point. We're a solid company. We're local. We do everything in-house. Your closings are done here. The only thing we don't do is we don't collect your payments. But anyway, give us a call, 772-285-0315. Thanks, everyone, for listening.
Thank you so much.
You've been listening to Team Victoria and Mike right here on WPSL, Port St. Lucie. Talk to Treasure Coast, webcaster to the world.